Well, February is in the books, and it is already 2 months gone. In this episode, we're going to look at the performance of the asset classes and sectors and stocks, see how they performed in February and year to date. Generally, as you know, when you follow seasonality, February is not a very strong month. As a matter of fact, it's one of the weakest months. And this year it is not an exception. So, what we see, as you can see, for the month of February, S&P 500 was down 1.7%. Nasdaq was down 4.1 and Russell was down 1.6. When we look at the strongest of the US indices, it was really the Dow, kind of flat. Um, the DAX, the German DAX, the Euro stocks, Nikkei. As a matter of fact, a lot of foreign markets have outperformed United States, and for many factors, we look at the cycles, we also look at the dollar's strength. And when we look at the commodities, we see, well, crude oil, which we will talk about in our weekend market analysis. Crude oil was up 7.5%. The Brent was actually even better, 9.5%. Gold was up 2.5%, copper 2.3%, but silver was down 12%. Also, we had strong move in soybeans and wheat when it comes to our grains. As far as year to date, well, S&P is flat and Nasdaq is still down 1.78 thanks to our rotation from AI stocks, especially our Magnificent Seven stocks. The strongest of all the sectors indices in US is the small caps, Russell. So we see movement from the big cap Nasdaq to small cap Russell. And Dow was also up 1.3%. Now, gold and silver were the stars. Gold up 20%, silver 31%, platinum 16%, crude oil 17%. So we can see commodities as a whole have done very well. When it comes to the currencies, again, we talk about commodities. Well, the commodity currencies such as Aussie dollar and New Zealand dollar, they have been the star performers. A euro is third, really flat, under 1%. Euro, pound, 0.35. The weakest, if you consider Bitcoin a currency, it's like a really hybrid. It's hard to define Bitcoin was down 23%, and the dollar versus Swiss franc was down 3%. As far as the sectors, we see again commodity related. Basic materials were up 26% and energy up almost 23%. We've been talking about the staples for the last 4 or 5 weeks, and the consumer defensive up 15%. And again, industrial up 15%, and defensive utilities 11%. Well, the worst performer year to date has been the financials, 3%, consumer cyclicals 3%, and also technology 3%. As far as the industries, we see year to date the strongest one. Again, we see commodity related. Silver up 76%. Copper, these are the mining related. And again, these are the companies. Remember, we talk about the stocks. Copper up 45%. And the oil and gas drilling up 41%. The worst performers are the gambling, down 36%, advertising agencies 30, and we look at the software application 22%. As far as when we look at the ETFs, which represents all sectors, these are the funds, exchange traded funds. Again, what we look at S&P, Nasdaq, they follow the futures. And then on the other hand, what we see is the equal weighted S&P versus market cap weighted, which takes the big magnificent seven into consideration, we see the equal weight was actually up 3.38%. So when we look at as a whole, when we look at the map, so what you look at, the brighter the color, the obviously the stronger it represents. So when it's bright red, that's the really lost a lot. And when we look at the bright green, that means it's up a lot. So energy sector up 11, almost 12%. We also, when we look at, again, this on monthly, we see the miners up 3.28%. We see the volatility up about 8%. Japan up 8.4%. So that was for month. For the year, as we mentioned, S&P was pretty flat, but equal weighted S&P 500 up 7%. And as we also mentioned that the, the small caps, they were actually strong. When we look at the energy again, up 25%, mining, gold miners up 35%, silver and silver miners. We look at the huge numbers when we look at this is only 2 months a year. As far as world stocks, we see for the month, Taiwan Semiconductor up nicely, and we look at the Toyotas of the world in Japan. In Australia, we look at the BHP, and again in commodities up 15%. So basically for the month, we see the mix. We see Europe and part of Asia have done well, while BABA was down 18% year to date. I mean, for the month, year to date is only down 1.7%. So February really took a lot out of Alibaba. Taiwan Semiconductor is a star, up almost over 23%. Again, commodity related, we look at the Vale in Brazil, and Petrobras in Brazil, again, the oil company 40%, BHP up 35%. And when it comes to the S&P 500 stocks, well, you see why the RSP, the equal weight, has outperformed the SPX. And the reason is we see the Magnificent Sevens, which are represented by Microsoft, which was down over 18% for the month. NVIDIA was down over 7%. We also look at Amazon down almost 14%, Tesla down almost 7%, Google down over 7%, Meta down over 3%. So when you look at these, only Apple was up 3%. So you take these seven, and then we come to the consumer defensive, we come to the industries, even healthcare, utilities. You see all these bright greens, and that tells us why RSP has outperformed. We see like Walmart and Coca-Cola and Procter Gamble, almost all of them double digit. Pepsi over 14%. So that's for the month of February. Year to date, again, we see a mixed message. We see, well, majority of almost every one of our Magnificent Seven still down, and NVIDIA almost 5%, Microsoft almost 19%, Google is flat, Meta almost 2%. Yet we see Walmart, Coca-Cola, Procter Gamble, Philip Morris, Costco, Caterpillar, Deere, General Electric, they are all up double digits. As far as the best performing S&P 500 stocks, we have SanDisk up year to date up 168%. We see the TPL in energy up 83%, Moderna up 82%, even GenRC, which is a generator, up 65%, Micron up 44%. So we see a lot of big returns year to date, which is only 2 months. On the other hand, on the negative side, we see Intuit down 38%, Workday down 38%, ITTTD, Robinhood, they're all down over 30%. Uh, when it comes to our Russell 2000, it's even more impressive when we look at IBRX up over 393%, ERAS up 267%, and cost is up 156%. The biggest losers are GOSS 86% down, EHTH down 72%. And last but not least, it goes back to our previous year's tax loss. And these are for if you're a long-term investment holder. You see again our stocks. Some of them are really boring. Who would think? Yeah, I don't know if you've been to Dollar General. What a boring story, but yet still up triple digit. But we see four of our five stocks that we picked, they're still up over 100%. Micron is up 390%. And CVS is the least, as far as performance goes, the least profitable, is up almost 78%. I hope this was helpful. Now we are moving on to March, believe it or not. So we'll talk to you soon and have a wonderful month ahead.